Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is live Forex market review, identifying high probability trading levels. So that's tonight's webinar. We'll get there in a moment. Before we do, if you can read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, so I can't answer your questions, but you're more than welcome to join us in the webinar. Just follow the link that I've given to you. All right, so everybody else, if you can read through the disclaimer, any questions to the chat box or the question and answer box, I've got both open. All right, we'll move along now. If you don't know me, my name is Duncan Cooper. I'm a senior market strategist and trading mentor here at ACY Securities. And I'm a full-time Forex trader, been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me at our website, acy.com, go to the market news tab, or at our YouTube channel, ACY Securities Australia, or you can connect with me personally through the week on my handles there, Twitter and LinkedIn. As well, if you want to connect with us at ACY Securities, we've got our Telegram channel. If you want to get access to that, just contact Nathan.bray. His email's at the bottom there, but I'll put it in the chat for you. If you want to get access to my chart layouts and templates too that I'm using in the webinar, just contact Nathan there. He will set you up. And that's for MT4, not MT5. So his contact details are in the chat there. All right, so let's get into first up the news for the day to the end of the week. So let me just get over there. All right, time shown here, Queensland time. Now, getting into Thursday here. Big one for the evening will be the Euro main refinancing rate policy statement, expecting no interest rate change there. Expecting a hold at 4.5, but you never know. Then at 10:30, we've got the advanced GDP QQ. And at 10:45, following that interest rate decision at 10:15, we have the ECB press conference. So really from about 10:15 through to about 11:50, it's going to be, I would suggest, quite volatile for the Euro crosses. And tomorrow, I'm just seeing what we've got tomorrow. We've got 10:30 p.m. tomorrow evening for the US Core PCE Price Index, and on the midnight for US revised UOM consumer sentiment. So got a Forex factory and review what's coming out over the next 2 days, so you know what's coming out. The big one there is the interest rate decision from the Eurozone. All right, so let's get to the charts. Dollar index. Now on Tuesday, we were down here, and I did say, go to the weekly chart, we had a negative candle. I did say, just because we're negative for the week and down, does not mean to say we will be by the end. And very positive was the US dollar yesterday. Coming back up from weekly supports. Are we putting some form of support area, higher bottom area here to move up to challenge 107.67 over the course of time? The monthly chart here, we're getting close to the end of the month. We may be going to finish on a very positive or a reasonably positive month. Just taking out these highs at the moment. So this may need a pullback for a higher bottom, but very positive Tuesday, Wednesday into Thursday. When I was doing the webinar, we were actually negative on Tuesday, but we were just starting to reverse down on the euro dollar. All right, S&P 500. It's getting actually a little bit long down here. It's never had a rally of any magnitude. So at the moment, it's breaking below what is weekly supports. So as I've been saying, we've had this major decline, major rally, or we're failing at the 79% level to have a long-term move down. And putting in the next lower top on the weekly chart to a lower bottom. If If you're not short and you want to get short, I'll be watching 41.94. This area of broken support. Does that now hold as resistance? If you have a day up, does that area hold as resistance to be resistance for a further move down? It is getting a little bit long in the tooth when we measure the range. That's the weekly range that was before the rally. You know, we're getting close to the 127 extension. So once we get to the 127 extension or below, it may be then the next weekly rally to come on the chart. So we are getting a little bit low down there, but for those that want to sell, look to 41.91 to be resistance. Does it hold there to move down? All right, get into currencies. Now, hasn't been the easiest to get in on the euro dollar other than just selling, depending on what your strategy is, because it hasn't rallied back up to any resistance since its false broke 106.35 over here, monthly support that was. It's false broke moving above that now resistance area. And it hasn't really had a pullback since it started selling off. So if you're not short, there's a daily, let's just go back to the daily chart. There's a daily high here. There's a daily high up here, and there's a monthly support here. For me, if we've topped out up here, now you could say the trend's still up, but the weekly trend, if we go to the weekly chart here, the weekly trend is down. This is just corrective, and that's quite a nasty candle that we're having this week. So we may be just really looking for a rally back to resistance. And my area would be up here. Can we come up to this area? So I'd be monitoring some kind of retracement from the decline we're having this week. 62 level overlaps nicely with this high over there. Now, it doesn't mean to say we have to have any rally of that magnitude at all. We may just simply rally within the 4-hour range. So the 4-hour range is here, and you could be monitoring that range. All right, so that's yesterday's high down to the current low of today. And if we keep moving down and keep dragging that down, if we get a nice rally today, we've got a central pivot point in the 62 level overlapping quite nicely up here. So within the 4-hour range, that would be a good area to watch. And if you go left, we have some old support, the low of Tuesday here. So that would be a good area to watch if we get a rally today. This area here, it's about 105.77. Now, of course, we've got the interest rate decision today. So, you know, if we get a massive rally, it's about 74 pips up to 106.16. And it's about 93 pips to 106.35. All right, so we could definitely get up there today. But I think the bias is to the downside. So irrespective of what the news does, I'm not really focusing on support down here to be a level to buy from with the rejection that we're having up here. I'm looking to sell a rally, depending on where price goes after the news. Euro yen, it's not really had a rally, and we had some, looks like we've had an intervention candle on the yen pairs if you've been following the yen pairs over the last couple of hours. Dollar yen has broken above 150, but I'm pretty sure, I don't think anything's come out to say there's been an intervention from the Bank of Japan, but looks very much like an intervention candle. All right, so to the daily chart, I was discussing this yesterday and on Tuesday. Are we forming some form of double top up there? Personally, at the moment, I'd like to see price rally back up, form a lower top. We're quite a major span of time between these two highs and creating the double top price prediction down here at 149.09. That's the height of the pattern from high to low projected below. There's about 1,000 pips to get down to there. So if we could have a rally back up and form a lower top on the daily chart, then that would be ideal to get set for the double top pattern, assuming we can form a lower top and we just don't go through the top. So I'm just monitoring at the moment. I could be drawing a fib from high to that current spiky low, and just looking up the high end of the range up here, 79% low, 159.50, up to the high, this area up there. All right. Monitoring for some form of rally, because we're a bit overextended to the downside in the short term, and there's a bit of an imbalance in here. So we may need to come up to refill this area before the longer term decline. All right, I'm pretty sure we've had an intervention today. I'm not really thinking about getting long any yen pair because of the whole intervention thing at the moment. Is just looking for opportunities if pricing get to a very clear level. All right, euro pound. It's been moving back up. It is holding to a weekly uptrend at the moment. It's into, I don't like the area where we're at. You know, if you're wanting to get long, you got monthly resistance here and weekly resistance just to the left. It is holding to the trend. It's put in another higher bottom this week on the daily. Just unlike the area where it's at, we've already rejected this area once from over here. So I'd just be looking at a different pair at the moment personally. I've been just monitoring to see if in the area that we're at the moment, can it form some form of lower top? Because as I was saying there on, go to the weekly chart to show the area. This area here, that's a monthly low, that's a weekly low. There's an area of resistance there. And whilst we're fractionally above it by about 5 pips, if we do once more reject today, we could then have a day down tomorrow for a lower top. So I'd actually be looking for a lower top in that area personally. But it's not where I want to go long anyway. I'm not going to go long into monthly, weekly resistance. So I would have to see a clear break above this area and then another higher bottom to form to think about getting long. I'd have to see the area of resistance that we're contending with at the moment. I'd have to see this come up clearly up strongly, wanting to pull back to this area to be support if I wanted to get long. All right, let's get into the pound pairs. So this was a highlight the other day when we were starting to reverse down, where we were forming a head and shoulder pattern. So in the current move, it's getting very long in the tooth here, because if that's a head and shoulder pattern of sorts, the target in the short term is down at 120.22. All right. Now, to the 4-hour chart, you know, I'd be looking for this to come down here at the moment. And then looking, you know, like we had a rally up here, be looking for a rally to come up this way and look for the next opportunity to sell wherever the next rally finishes. All right, because we're back down to support here. The support over here at 120.37. And we're trying to negotiate this area of support here. So the highest probability price action will be that we come down to the 127 extension and then come back up this way. All right, so I will just be monitoring that at the moment. You could be looking at 121.10 to trade down from. But with this move here getting into its profit-taking phase, it's a little bit less probability that this is a daily level. Let's just go back to the daily. Got a daily level here that we've been holding at. We could just come back up to that daily level and hold, but I'd be more concerned that we're going to rally back up this way to put in a lower top. So you could watch that level today, 121.100, 121.10 it is. You could watch that level to see where the price just comes up and fails here. Can you get a tight entry? So it's the last month's low. So maybe we're now breaking below last month's low with conviction as we're getting into the end of the month. So you could watch 121.10 for failure intraday today. If we get above that level, we're probably starting the rally up to the next lower top forming on the day chart. So some of these pairs at the moment are a bit far down after 3 days down. We may need a 1 or 2 day move back up. So don't get caught at the bottom. All right, pound yen. Another intervention now candle there. All right, so it's getting rather range bound. I think this line I've got drawn in there is probably old. And we've got some form of range here. That's at 81.69. Because we've got the pound moving down, we've got the dollar yen moving up. So yen has been weakening, pound's been weakening. So pound's been weakening more than the yen's been weakening because the pound yen's been moving down, but we're in this range here. So I've got to treat it like it's a range, really. I draw my fib this way, so I've got the 79% level at the bottom. We have already hit the bottom of the range, so or within a pip is looking really to be a buyer on support, stop at the 127R, targeting a move back up to the top of the range. That 4-hour candle, spinning top with wicks either side. Drop to the 15-minute chart. Whether or not it will get right back down to support again is another matter, but you could just draw a fib across that range and look at the 79% level down here. 181.34 down to your support. Does it come down here to get support, to put in a little higher bottom in here to move up the range? So we're at the 79% level at the moment. If you're wanting to trade the range, let's get rid of that fib. If you're wanting to trade the range, you need to be in by the 79% level. So you've got reasonable risk reward to get back up to the top of the range. Ideally, to get the best risk reward, you want to be buying at the base of support, targeting the top. So you don't really want to let that go much further up if you're trading the range, because then your risk reward becomes less preferable. So monitor a pullback on that 15-minute chart. Can it pull back to the 79? Hold. So you're getting in close to the base of support for a move back up the range. All right, Aussie yen. It's rather range bound too. This fib, I'm just monitoring that. That's actually the range of the month. So when price was up here, I was monitoring what was going on here at the 79% of the range of the month. And on Tuesday, if you're with me, I said after the CPI data coming out Wednesday, watch up here. I said watch this area here, because that area was the weekly resistance level. I said watch that area for price to come up and fail. So if you're watching that, hopefully you were all over it. There was an opportunity to sell it on the 15-minute chart up there, but it's still not breaking down to the downside because it's stuck in a very range-bound environment over the last week and a half to 2 weeks here. So on the 4-hour chart, we're seeing supports from here, 94.311. And again, it's already bounced up from the bottom of that range up to, you could call the top of the range here. All right. So again, buying at support, stop at the 127. But I need my fib drawn the opposite way around. So I've got the 79% level at the bottom. So let's get rid of that fib. There we go. lost my line. All right, so we've got a bit of a range there. This may come down today or over the next 24 hours to revisit 94.31. If you're watching on a lower time frame, if that starts to hold, you could be selling very close to the base. Stop goes at 127R. You're looking to target back up to the top, 95.65. Okay, still range bound. May stay range bound because the Aussie's testing monthly support today. So the Aussie dollar is testing monthly support. So if that starts to move up, then potentially this is going to move up. All right. So the Aussie dollar, if you go to the monthly chart, hang on, I'm going to get rid of all my mess or we won't be able to see the monthly chart. All right, so the monthly chart, we're trading into some support over here. 62.47. I think we've been a fraction short of that today. We've been to 62. Where have we been to today? Been to 64.44 today. So we've actually been 3 pips below that level. I'm telling a lie. Where have we been today? Been down to 62.69. So the monthly level was at 62.47. So it's not great trading at the moment on the Aussie dollar. It's rather range bound. It's in about 200 pip range. Then it's holding its trend to the downside, but once it gets to the low of the move, as it breaks the low of the move, it keeps moving back up because traders know at 62.47 there's some support here from back in time. All right, so you can see we actually did go to a slightly higher top here, create a bit of a double top. And now we're false breaking the bottom. So maybe we're, going to hold on the bottom here to trade back up in the short term. You can see once, twice, fraction short 3 times there. So this is the 3rd time of testing the level. Is on another test. If this was to come down for another test and it holds, we're probably moving back up. This is very stretched down here as well. So, and that's the range for the whole week now. Is the way this is zigzagging. It comes down and it has, just watch. These are the rally lengths that we're having at the moment on the Aussie. All right. Very similar. So we may well have a very similar rally now. All right. Because that's just the nature of price action on the Aussie at the moment, the way it's doing things. So I would be looking up here for the next rally to finish. Now, I don't normally go counter trend, but at the moment, if we're going to move up to the 79% level, which is at 63.71, or at least back up to weekly resistance here at 63.64, 63.57, of course, price has to move up. So if you want to go counter trend and be moving back up the range, draw a fib across this range and look to see if you can pull back to the 62% level. That overlaps with support at the moment. And look to see if it pulls back to put in a higher bottom here to trade up if you want to trade long. That's assuming that it'll pull back or not. But, back to that 4-hour look, it's having these equal kind of rallies. So look for another rally back up at the moment, I think. I think we maybe put the low in for the week. And we're going back up inside the range of the week, back up to the 62 to 79% area on the Aussie there. All right, New Zealand yen. It's false breaking support here. And those colors are just me highlighting where I thought the range was on Tuesday. So we're on support at the moment. what I need to see is what the New Zealand dollar is doing, which is rallying at the moment. And this is the weakest pair across the 12 pairs that I look at. So with that in mind, this is probably at the moment going to have a rally back up within this range, which will help the New Zealand yen move up here. But I don't know, even though I've got a range formed here, I said this on Tuesday, with the New Zealand dollar moving down so strongly, whilst this is range bound, there'll be a tendency for this to break below support if the New Zealand dollar keeps moving down. So I don't know if it's a really good idea to be trading up from support here. It's not to say that price can't trade up and it can't offer you a good trade. I just think if the New Zealand dollar keeps trading down, this is probably going to come down over time. So I'd be watching this in relation to the New Zealand dollar. There's a range there that it may only just trade up inside this range, maybe up to the 79% level, to then come down, and monitor that in respect to what the New Zealand dollar is doing, because just want to go to the day chart. We've got this double top in play. Target of the double top is down at 56.92, so that's going to drag the New Zealand yen down if we keep moving down towards. Early in the week, we had the opportunity, or you had the opportunity to trade down from broken support becoming resistance here. Now, I think what's going to happen at the moment is we're going to see a rally potentially within this current move down on the 4-hour chart. It's overextended. And looking up here, there's resistance at 58.50, 58.58 and the 79% fibs there. I would look for a rally back up to there at the moment for the continued move downward. All right, keep following the trend. When I was out on Tuesday, I was saying, watch 58.78. The next day it came up 1 or 2 pips short for retest. That was a great area to look for short this week. Can it come up and now put in a lower top up there at the 79% level for another decline? All right, dollar Canadian's been moving up. It's getting very high up to the monthly resistance level at the moment. There's the monthly resistance level over here. If you go to the monthly chart, you can see that high, 138.61. It's not in a great area at the moment to be a buyer, and there's no signal to sell. It's just very high up for a buyer at the moment. Continuing the weekly move up. Nothing changes. We're probably going to test this high up here. This would be a good area to watch for an obvious reversal over the next 1 or 2, 3, 4 trading days. But that would be in the face of the US dollar strength at the moment. But that's the March high. All right, so we may certainly see some failure there. Proved to you the other day on the Euro yen, when that came up to its August high, had a significant sell-off intraday for 2-3 days. So the dollar CAD could have the same kind of reaction up here. In terms of the uptrend at the moment, I think it's a question of, if you want to be in this pair to the long side, you need to be monitoring the pullback to the 79% level. 79% level is very nice there, 136.94. It overlaps with the weekly area of now support, an area where we were struggling at, and then broke up and above. So if we do pull back, that will be the level to watch for support. And of course, there may be a counter trend move up here if we do hit 138.62. But we might be, in terms of fibs, we're kind of at the top of the move, because the last fib draw was there. Pull back to the 62, just short. We're at the 162 extension at the moment, so there's more of a chance it's going to pull back now within the new fib that was drawing, and monitoring it for the next pullback before it starts moving back up again. Okay. All right, dollar franc. Now, this is how I was drawing things on Tuesday, but the fib never got that high, and it did pull back to a 62% level there, moved up. That was on the 4-hour chart range. So the day chart is reversing from the area of support that I was discussing on Tuesday. We've had this week 4 positive days from that level. Now, it isn't actually a lower top, lower bottom at the moment on the daily, but on the weekly, I was discussing this area to maybe be a very strong level of support. This could be where a higher bottom forms, especially if the euro dollar is forming a lower top on the weekly chart. So if nothing really changes this week, we're having what we call a piercing pattern, reversal pattern on the weekly chart here, which is kind of leading to the idea that we're going to be moving up next week. So to the day chart, I know that trends down the day chart, but that weekly chart, if nothing really changes from now to the end of the week, we're going to have a reversal week on the weekly chart, suggesting a higher bottom forming on the weekly chart. So that will trump the trend that we're seeing on the day chart, and it'll probably just be a question of time before the day chart trend turns to up. So for me personally, if you want to trade the dollar franc, I'd be monitoring the 4-hour ranges for a pullback, and then looking for a pullback to 62.79% area to start to get support for then the next move up. US dollar strength at the moment, that is the flavor of the week after it was negative at the start of the week, but Tuesday, Wednesday into Thursday, the strength has come back in. And if nothing changes by the end of the week, we're going to have a very strong finish maybe by the end of the week. All right, dollar yen, it's been moving up. Now it's moving back down. You can see a nice little intervention candle there on the 50-minute chart. It's around about 90 pips high in one candle. That's why I keep saying it's very dangerous to get long on the dollar yen. You don't want to be getting long at the top of an upward move for sure. All right, so let's have a look at the day chart. It's getting closer and closer towards last year's high up there, 151.94. Now, I don't know if the Bank of Japan can really fight too much against the strength of the US dollar at the moment, because if this US dollar keeps getting stronger and stronger, it's just fighting a losing battle. But it does look like they're intervening and trying to just suppress how far it can move up. So even though I'm getting intervention, we're still in an uptrend here. And if you want to get along this pair, you really need to monitor the daily range, fib range. This is the 4-hour chart now. And look for, see that dip? So the intervention from the high down got support at the 62 level and all these 4-hour tops. All right. Makes life very difficult now. What do you do? Do you wait to see if it can pull back to the 62% level once more? It may only pull back to this high now, which is at 150.15, down to 150. 150 to 150.15 has been where we have been resistance and intervention. But now that we moved above it, maybe that is now going to become the floor. All right, so my preferred option would be the 150 level. Monitor the 150 level down to the 62% level. Does it come down to this area? That's what I would look for. Whether we can get down there, because we've already had this massive spike down, it may not want to get down to there. Very difficult at the moment. Dollar yen. And be aware, we do have the Bank of Japan statement next Tuesday afternoon. All right, so that's the dollar yen. You know, if you want to get along this pair, as I keep emphasizing, Don't get caught at the top of the move because you'll probably be some intervention. Look lower down within the range. Okay. All right, so look at gold. Don't need I was explaining this on Tuesday to somebody. All right, still going up on gold. Did have a dip down on Tuesday. I was saying down here, this was the level I was discussing on Tuesday, 1947. Didn't quite get there. Now we're putting another high bottom in. Today, as we're moving above this weekly high, okay, let's just go to the weekly chart. It's a weekly high here. Want to see that level hold intraday. This is the 4-hour look. So, if we went down to a 15-minute chart, today as we're moving above this area, this is the area to watch. Can the buyers hold above 1987 now? I just want to see where the 4-hour range is. Could look for a pullback within the 4-hour range, but that is going to mean we're going to false break with the weekly high point. Really, if we look at what happened yesterday, I just want to see which way. Yeah, price did go down from that high. So yesterday was the time to get in as you started to see a reversal up from the 79 to 62% area here. Now we're really getting up to the top of the move. So whilst we are holding above that weekly resistance level, the safer route would be to watch the next range for a pullback because we're getting high up there. We're getting the profit-taking phase of the current fib level from yesterday, fib range from yesterday. So I'll start to monitor the next range. Keep dragging the fib up if price keeps moving up and start to monitor the 62 to 79% area for the next pullback. So a lot of these pairs, they're either at the top of their moves or they're at the bottom of their moves. Gold has been moving up, of course, with the geopolitical environment. I can't be 100% sure, but I did see a headline that said Israel did fire some bombs across. I can't be 100% sure whether they did or didn't. I haven't really seen the news on the TV, but I saw a headline on a web page. So gold is going up. It's not following the decline of the pairs to the US dollar. So let's just head back to euro dollar. What is it doing? So for those coming in late, we do have this evening some things up for the day. We got the interest rate decision coming out from the Eurozone. Not expecting a change. I think the last month we weren't expecting a change, and then they did hike by 25 basis points. And then the market spiked up a little bit and then just collapsed for the whole trading day. And they may have come out last time and said they may be at the terminal rates. So whether or not we will see any real adjustment to above 4.5 today, like we had a surprise last month, we'll just have to wait and see. But that's going to be the key news item for the day, the euro interest rate decision. So intraday from yesterday's high to low, I would watch the central pivot point at 62% level there on the euro dollar. But we might just do a bit more work as that news event's coming out today. This is the decline of the week at the moment. Now, we can certainly put in 100 pips of a move when the interest rate decision comes out, or the monetary policy statement comes out at 10:45. So, we can certainly move up 100 pips. That gets us back up to 106.35, 106.39. Monthly and daily resistance up there. That would be the perfect area to see a rally today if the news could drive it up. and then hold to turn over to put in a lower top on the daily chart. Now, whether or not we can get up to there today, but that would be the major area to watch as that news event's coming out today. It can certainly move 100 pips for sure. And we got the 62% level at 106.32. So, can we get up there today? All right, pound might get up to that 121.10 level today. And the Aussie, don't know whether the Aussie can get up there today, back up to this weekly resistance area in the 79% level. That might take another day because today's projected high is coming in at 63.30. So it's well worth watching tomorrow. So this is actually the range of the week. And I've taught you, we often come up to the 62% level or the 79% level of the range of the week before then the next decline. And sometimes getting up to the 62 or the 79% of the weekly range happens in the same week. So we can come up within the range that's been forming this week to say the 79% level. Then we top out on Friday for a move down Monday, Tuesday, Wednesday. All right, we don't have to get to the 79% level of last week's trading range in the new week. Often it can happen in the same week. All right, so it's worth watching that tomorrow. Can we get back up to the 79% retracement area of this week's range this week? All right. All right, any questions before we wrap it up for the week? What I'm finding at the moment is as 100. So, what I'm finding at the moment is when I'm doing my analysis with you guys and girls, I'm off. Price isn't really at a level that I'm watching. But on Tuesday, I said watch up here at 95.85 on the Aussie yen. And if we just go into that area over here was where it was. And there was a nice swing point break in here for then a move down into today. All right, so just watching the levels that I'm discussing on, even though we're not at the levels today, we're probably often a day away from the levels from the great levels that maybe price is going to fail at to have a nice move back down from or up from. All right, so NAS 100, you want me to have a look at that one? Similar to the S&P 500, it looks like it's breaking down through support. It's getting close to 127 extension now. But on the weekly chart, it's putting in lower top, lower bottom, further lower top to a lower bottom. Looks like on the S&P 500, 79% failure of the major range. It's almost, if you look at the weekly candles, we're almost on the weekly range already. So if you're wanting to get short with that trend, you want to look for a rally within the weekly candle. So, the weekly candles there, it's trying to move below support at the moment. Drop to the 4-hour chart. That's the range for the week. I'd be looking at the 62.79% level of the range for the week to have the opportunity to sell a rally in line with that downtrend at the moment. Slavy asking me, has the bodge given up its £150 marker or dollar yen marker? Well, it's gotten above there, but I think they've intervened today. But maybe they're fighting a bit of a battle. So on that NAS, can we see a rally up to the 62.79% area? That's what I look for. There's a bit of an imbalance here, so that's due a rally. Slav, you asking me on the dollar yen. It spiked down before. Kind of got support just underneath 150. So maybe 150 is becoming support at the moment. Maybe they're looking more up to the 151 area now. But it does seem like they're letting go of the 150 level now. But they're still coming in and intervening a little bit there, I think. And Chris, you want me to look at oil? Oil, well, from my perspective, if depending what next week brings, but this is a very minor lower top forming at the moment, which could be a true lower top forming to actually move back down. It's just getting some support from over here. So this high over here is getting support. Now on the day chart, it is just holding to a trend in that it is holding to higher bottom. This could be another higher bottom here. So, if we have a day up today, break the high of yesterday, which was a reversal candle, then potentially you could say that we are holding to the uptrend here. And maybe we're moving, back up like so. So whilst 82.66, that weekly top there holds to the left, that trend can still hold and move back up to the upside. But from the geopolitical landscape at the moment with the Middle East area, of course, prices have moved up, but they are now moving back down. So, which is often the case. If we get a knee jerk reaction to the upside, and everybody thinks it's going to $110, and then it's not going to $110 at all. I mean, yesterday's spike down, it is getting support at where we get the gap come up. This was the start of the Israel conflict, and we are managing to hold at the price where we're at just before the conflict started. All right, but it's not holding this sort of gain and flying up continually. So the break above yesterday's high is going to confirm maybe there another higher bottom, moving up back up the range once more. It's very zigzaggy, being affected by what it thinks is happening in the Israel conflict at the moment. All right, that's my thoughts on oil. Whilst it's holding above 82.66, there's every chance it's moving back up to, maybe challenge 92.61. 92.61 is this weekly area over here. So we could just operate between weekly supports, which is 82.66, and weekly resistance at 92.61. All right. All right, I think I might wrap it up there. Thanks everybody for the questions. And just be aware of the euro interest rate decision a little bit later. Don't get caught in that. Other than that, have a good end of the week, good weekend. And if you have the time, look forward to seeing you next week. Okay. Thanks, everybody.